Of all the things on the docket this week, plus layer on what's happening in China, what do you think the biggest headline is going to be, and which way is it going to move the market? Alicia?
Look, I think you can't escape the fact that what's held up on the index level have been large cap tech. And the names that you've talked about this week reporting are really going to be the first thing to tell us where the next leg is for the S&P. Because for the most part, these names have held up and they're on support, and they have not collapsed as have other parts of different sectors. And so absent huge blowout earnings, I think we're at risk here. We also have PCE data at the end of the week, the inflation data, which is what the Fed uses. So that's another huge impact here. If PCE keeps on moving higher and doesn't look like it's at least flattening or rolling over, it's going to be another leg down for the market. So it is a very difficult week ahead of us. That's why I think you're seeing the sell-off last week and the futures down this morning. There's a lot riding on this. And so far, the argument has been in favor of the bears. And that is what is setting investors on edge right here.
Mimi, bull or bear this week?
Oh, geez. I'm kind of an optimist, I have to say. I mean, we're coming in. I do think that this and next week, the earnings are extraordinarily important. But the early indications, earnings last week, the early look is they're beating by a small bit, by something like 9%. So this week and next week, really important. We're coming into this time period with a really strong economy. So I guess I'm more of an optimist.
So would you buy ahead of these earnings? Would you be buying some of these big FANG stocks, for example?
Well, we're a little bit underweight equities right now. We are short duration, but we've closed our underweight in fixed income and concentrated some of our positions in the front end of the curve where we think things are more fairly priced here. And we're not looking to catch a falling knife, but we really are looking at some of the value in some of the tech stocks have been beaten up extraordinarily. So
it doesn't sound so bullish. If you're underweight equities, that doesn't sound like a bullish take.
We're a little underweight equities. I think we're pretty well positioned, actually. We're overweight real assets. So overall risk assets, we're fairly neutral.
Alicia, where are you? What would you be doing this week?
So it's interesting. I sound more bearish, but actually we're equal weight equities. We did pull back from emerging markets about 9 months ago and from developed Europe. We just feel that in this cycle, it's too tricky to get this right. And we did expect a stronger dollar. When the dollar is stronger, things break in other parts of the world. I think we need to start thinking about the difference between what happens to the real economy as a result of the Fed actions and marching forward quickly, and what happens to financial assets. Those are two very different things. And I think it's quite plausible that things can break in the financial asset market globally. Think about what's happened to the yen, the yuan, the euro, and the pound in the last 3 months. A very strong dollar does not bode well for the rest of the world, does not bode well for multinationals and earnings. So I think that we're seeing the beginning of the dislocation from the Fed's policy. Do I think the U.S. economy can muddle through it this year? Yes, we do not have a recession in the cards for the U.S. this year. That doesn't mean that the market's going to take it all that well. And I think, look, VIX is near 30 this morning, so it's high. I think that you have to wait here to get through that meeting next week of the Fed just to see what some of the verbiage is out there. I think Mary Daly really spooked the market with her 75 basis points thought out there, which is very consistent, by the way, with what happened in '94, which is the Fed's roadmap here.